can't promise you we're going to delve into the meaning of life, but we are going to talk about mass adoption for DeFi, which is just as spicy. I'd like to thank my panelists for being here today. We're going to look at this from a tangible and practical perspective, but also from a human and perceptual problem too. Once we've reorganized the panelists, that is.
There we go. Musical chairs.
Oh, it's musical chairs. I don't know if you guys had that in this country growing up, but it was very fun as kids when we were little. Okay, so, and hopefully we're going to come away with some practical insights and some tangible outcomes for how builders in the space can be considering what is needed for mass adoption when they're building out DeFi-based solutions. So before we start, can we do a quick round of intros? Peter, we'll start with you.
Yes, hi, I'm Peter. I'm CTO and COO at AllUnity. We're currently building up an e-money institution in Germany to issue a euro-denominated stablecoin under MiCA regulation. So I'm the technical guy on that team, helping to build it up. Before I co-founded many regulated companies. For example, Solaris Bank was probably the most known one, so the first fintech in Germany that got a banking license, but then also worked for a regulated exchange in Germany and built up a DeFi startup for the past 3 years.
Great. Seb?
My name is Sebastian Higgs. I'm co-founder and COO of Cordial Systems. Our company effectively provides custody technology for cryptocurrencies and digital assets, working with everything from cryptocurrency native exchanges, custodians, also traditional finance exchanges bringing equities markets on-chain, and banks as well. So my background, myself, focusing on the custody space in crypto for the last 7 years. Previously built a UK-regulated custodian that was acquired in 2020 by Genesis Global Trading. And going even further back, I started my career out at Goldman Sachs, so coming from a very traditional finance background.
Great. And Swain?
Hi, I'm Sven Walfels. I'm one of the co-founders of Monerium. We're the first company in Europe to put regulated, authorized fiat money on chain. We have euros, sterling, and dollars currently powering a number of applications, on-chain applications in Europe, including Visa debit card with euros and sterling, and also a MasterCard debit card with euros and sterling. So arguably, because we're the first company in Europe, and Europe is the main jurisdiction to have had a proper license for stablecoins, we are the first company to get stablecoins right in any major jurisdiction. Our euros are fully integrated with the SEPA payment system, so there's no ramps, exchanges needed to access them. You can just move them from your off-chain bank account into your on-chain wallet and right back without any intermediaries. So about myself, my background is in technology, physics. I first started a company in California when I was a graduate student at Stanford back in the late 90s. That's when I also first started messing around with cryptography, and I took a class which is now famous at Stanford University on cryptography by a guy called Dan Bonnet. So I was fortunate enough to have the relevant experience when I came across Bitcoin back in the day. The longest I've ever lived in one place is in London, UK, and I helped organize the first Bitcoin conference in London in 2012. The first Bitcoin hackathon I participated in was in Berlin back in 2012 as well. So I've been in this space for some time, and I'm amazed to be here because it's all about human relations, as the gentleman who had the presentation before said. It's all about interactions and engaging and helping people use the tools that so many of us have built in this space.
Okay, so we've got a custodian and then 2 stablecoin operators. Does that mean there's a bit of rivalry? Are we going to see any fights today on the panel, or are we keeping it kosher?
I think it's...
We're going to find out.
Let's see.
It's a very young ecosystem.
Yeah, let's see if I can throw
Peter and I discussed this earlier, but it's a very young ecosystem, so there's plenty of room to grow inside the ecosystem.
That's a very diplomatic answer.
Yes. I think we both agree on that.
Exactly.
Yes.
Okay, so a nice segue then from the presentation around human interaction. My first question is actually centered around when we look at barriers to mainstream adoption. How much does the human or the perception of the industry actually block a lot of people from moving in? And I'm thinking, or the the FTX scandals, Binance CEO being imprisoned. I mean, we're no short of a scandal in this industry. So how much do we think that is one of the biggest barriers to adoption? Peter, I'm going to start with you.
Yeah, that's a very, very good question. So I think in crypto over the past years, we have always seen these hype cycles, right? So that, and I think each of these hype cycles has been connected with some developments going inside the crypto industry. So in the beginning was let's say the early adoption. Then there was let's call it invention of the ERC20 token. So we had the ICO hype, we had the DeFi hype, we had the NFT hype, and kind of there were always these topics related to like a hype being created, and in between there were the crypto winters, the famous ones, so where the prices went down for quite a while. So it's now the question kind of like how many new topics can come up from the industry so that we can keep on going what these hype cycles are. And I'm personally a little bit pessimistic on that, I must say, and eventually also have a different opinion than some people in the room. But so I really believe, especially when people ask me like, should I now invest into Solana or Ethereum or Bitcoin? I always say like, of course the prices can go up when more people invest, but I think there's a barrier already of people investing. So if you kind of go to an anniversary party and some people hear that you're in the crypto industry, then there's always this 50% who kind of gratulate, like, are super interested.
You cannot tell an Uber driver that you work in crypto because they will ask for your recommendations on what to buy.
And then there's the other half that kind of hates you somehow because they made like bad experiences with buying crypto and so on. And I really honestly believe that crypto, especially when it comes to the prices, can only go up when it's actually used for something. So let me explain. So Ethereum the price can only go up if it gets used for something useful. So for example, there's like the invention of DeFi, there's like digital identity, there's stablecoins as probably one of the use cases these days that really can drive mass adoption. I think we're going to come to that also later during the panel. But I think it's now really about building something with blockchain infrastructure, building something useful. So not the next NFT, not the next pump fund stuff. So let's build something real. And I think then we're going to see the adoption of kind of like development of crypto prices, but also like the whole industry and actually delivering value.
But Seb, coming on to you, would you agree that these crazy price actions and headlines making the news actually acts as a gateway for people to move into the sector, who then go on to explore what this technology is actually all about?
Yeah, it's definitely attention grabbing, the headlines or the price of Bitcoin, or just reading in the Financial Times, about the Circle IPO very recently, and Coinbase, being the first one as well. It's constantly in and out of mainstream conversations, both the institutional level and at the individual level for the retail side of things, shall we say. But I think as Peter and yourself, Katie, touched upon, the difficulty that individuals experience when trying to get involved in this space. So, for example, when you're generally building products, you want to meet the user where they are within their context and make it as easy as possible, right? And
that is the big difference between traditional finance and decentralized finance, right? Where in TradFi, it's about people coming to where you are, whereas for we as operators, it's about going to the customer. Yeah,
in some sense. So, if we think about someone starting their crypto journey, perhaps, they think, well, I want to go buy some Bitcoin today. So, they have to go to a new type of exchange, one they're probably not using already for anything else. They have to go through a compliance onboarding, KYC aspect to that. They then need to deposit some cash. They then need to buy some Bitcoin, and then maybe even withdraw the Bitcoin to another wallet they've downloaded somewhere else. So all of these steps, and that's just going at a high level, there's a lot more to it than that, is you're asking the user to be very motivated to learn a lot of new things. And if they're not motivated, they're just going to abandon the task altogether. That's just natural. If it's too complicated or too annoying, why bother? Too hard won't do it. Exactly. So I think that's true. And as a general point, if we're going to get to mainstream adoption, for the individuals, again, it has to be more of a one-click experience, maybe within something they're already using, perhaps. And it's just another product. And same on the institutional side, cryptocurrency needs to be an asset class alongside equities, fixed income, commodities, currencies, sitting on the exact same level. And in some sense becoming quite vanilla and quite boring in that regard, but that's the way people can then access things in a very straightforward fashion as well.
Well, definitely boring if you compare it to monkey-based JPEGs that people get excited about. Svein, coming on to you, would you say that the human element or that perception problem is the same for both a retail and an institutional audience, or are there different considerations?
It's the same across the board and for any technology. If you look back in history, we went through a dot-com bubble, right?
Yep.
I was sort of finishing my university studies back then. I spoke to my uncle, who was a generation ahead of me, and asked him what he thought about it, and he said, in my day, it was Onyx companies. It was companies that had a name ending in Onyx. So there was a lot of experimentation, new technology. It was a transistor. What remains? Intel remains out of that. What remains from .com? Well, Google and Amazon remain from .com. What remains from crypto? We don't know, because it's too early to tell, but there will be institutions that use this technology on scale for institutions, other institutions for retail, to move money, send money, move assets, send assets, transact assets across the globe. Because ultimately, all crypto is, and people have different words to describe it, is shared ledgers that can be shared across the globe, so you can move assets instantly and peer-to-peer without intermediaries. And they're totally programmable. So this changes the paradigm of many industries, and it has the potential to do it. But it's important to sort of introduce them in a responsible way, which is why Monerium, we were fortunate enough to be early in this. The founders were early in this game. We noticed Ethereum when it came out. We had known Vitalik since before Ethereum. One of my co-founders even invested in the IPO of Ethereum, and then we said, okay, this could be something. Putting token on chain, putting all tokens on chain, not just like regular securities, whatever people want to, come up with.
But does early mean good?
But the point is that we started thinking about how can we do this responsibly and facilitate responsible adoption, and then a proven, reliable way of putting money on chain is like the precondition of everything else. Because we all use mostly regular money, euros, dollars, Turkish lira, in our regular day-to-day transactions. So our mission was to put fully authorized, regulated, proven form of fiat on chain. That's how we approached it, to foster responsible innovation. And our go-to-market in that sense also has always been arm the builders, to share with others, let others come and use our technology to build their apps. Okay. So that's our approach. We rolled out, we didn't do any ICOs, we weren't participating in any of the crypto speculation. Our stablecoin is regular money and is not listed on any exchange. It makes no sense to us to list money on exchange. So we took that approach to remove the big risk factor of having money on chain, putting it out there.
If you could score, I'm going to ask all of you this, out of 10 as a main hindrance to adoption, how would you rate human perception out of 10?
It's totally number 10. It's animal spirits that move markets.
So you think that's one of the biggest hindrances to mainstream adoption is the human perception of the industry?
It's ultimately, it's animal spirits, it's fear, greed, curiosity for the early adopters, but ultimately trust.
Okay, so you're a solid 10. Seb?
Totally. Yeah, I mean, not too far away from a 10. I wouldn't go to the top of the scale, but call it a 7, maybe an 8.
Okay.
I think the important bit there was the trust point of view, right? Trust is domain specific, and everything that has to be felt around that has to be configured in a way that is approachable and can work for the components within that network, whether it's a bank, whether it's an individual logging in on their phone, for example.
Do you not think it's ironic? We talk about it's an industry predicated on trustlessness, but yet trust is still a big element of it. Peter, out of 10, what are you rating this?
I would give it a 5,
diplomatic
5 in the middle. Simply because I believe there's so many different factors that have an effect. So it's not that only one, so that should get a 10. So there's like quite a bunch of
you're going
factors
more nuanced.
that kind of all add up to a 10.
Okay, let's move this discussion now onto the actual practicality of what you guys are all building in the space. How do we balance sort of user experience with elements like security that help build trust? and hopefully increase adoption. Seb, I'm going to come to you first because it all starts with custody.
Yeah, absolutely. So we effectively build, as I mentioned, for exchanges, custodians, and trading shops. So they have a variety of different contexts. Also, we work with a number of banks, and let's just take them as a particular example, given they're moving into the space very quickly now. And effectively back to the point of it needs to be just another asset class to them. So they have a way of managing risk, managing operations, compliance for equities, fixed income, and they need to do the same thing for cryptocurrencies. So crypto started out on the fringes, not within the finance world. It was its own thing, and is kind of now having to sort of tunnel back, in a sense, towards finance if it wants to become an institutional asset class and be involved alongside these other products, which is why banks are very opinionated in how they're going to run crypto custody. It's also why regulators like in Turkey and TÜBİTAK and other informational technology standard setting bodies are saying we want to have on-prem solutions. We want to have the banks in control of this IT, these infrastructure and servers, and the data must be within the country itself. We can't be having SaaS-based solutions in different areas where the vendor is a massive dependency. It needs to all kind of happen within the context of the banking world, and you can have key providers and vendors who are part of that, but ultimately you cannot have a massive outsourcing risk when you want to have the banks managing all of this. That's something they've been doing for decades, moving to cloud computing and other things. They're very familiar with letting go of things, but still retaining control in a way that they can, because at the end of the day, if something goes wrong, it doesn't matter if it's on their side or the vendor side. They still have an incident report to create. They could still have regulatory fines and even loss of consumer confidence. So the outcomes of risk materializing is far too big to simply accept a kind of trust us or a black box provider at the end of that equation. They need to have first-hand answers to all of the risks. They need to demonstrate that to the relevant bodies, whether that's regulatory or stakeholders within the risk committee or other offices within the company. And that's exactly right. So custody is the foundational layer, and they need to get that right before they can even start thinking about how do I move into staking or into DeFi and do other things which are potentially attractive business opportunities, but you need to be able to walk before you can run.
When we move sort of further up that funnel, then we've got our custody sorted, and now we're looking at actual applications like with AllUnity Stablecoin, for example. Are people more concerned about the security that underpins that? Do they want to be educated on that? Or do they just care about the thing working and doing what it needs to do?
Well, so actually, I'm now also going to explain a little bit why I didn't give a timeline in the previous question, because I think in the crypto industry, we currently have these, let's say, two parallel worlds that are coexisting, and that both on themselves have kind of their own waves, like developments. So because on one hand, there's kind of what we just talked about, so the more centralized finance crypto world, so where I have a counterparty, I have a custodian, or I have an exchange where I need to sign up, or maybe a bank as an interface, or some crypto startup. And in the end, that centralized crypto world works the same way as we know it from the banks, right? So there's like a counterparty, it sits in a specific country, there's some regulation, or there's maybe not regulation yet, but regulation to come, and kind of these things work the same way as we're used to it. But then there is the world like in crypto, how it was invented. So as a decentralized system with like a completely new architecture of designing financial services and running applications, building applications, also like the ownership like of the user, of the developer who develops a protocol, and eventually like a group of developers being responsible for something or even not responsible for something. And I think in today's world we're not talking much about that. Okay. But in the end, it's kind of the core of the innovation, because also when it comes to the adoption, I think like in the industries, so if you kind of onboard like on the centralized exchange and on the centralized architecture of crypto, of course you can be already like amongst the innovators, but you're more like in the mass case. But I think you get the most out of crypto if you really follow the new path. So if you run your lending business with a smart contract.
More on the DeFi side.
Exactly. Yeah. Or when you kind of start innovate with digital identity and also with stable coins, like as a means for banking, let's call it banking, and for like remittance and running all the use cases that you can do with a stablecoin. So for example, like treasury, so if you have like an unstable governmental currency, or to earn interest, or to send money across the globe, or to settle crypto asset trades. So I think that's the real innovation that we find here, and I think we need to get more people onboarded to this.
I mean, Svein, you're coming at it from more of, I would say, a retail perspective with what you're doing at Monerium, if that's fair to say. How are you balancing user experience with security?
Yeah, we have retail customers, but it's basically to prove how our platform works and showcase. What we have now also, we have onboarded financial entities that are performing nested services, nested issuance of our euro, dollars, and sterling on chain. So we have a retail offering, B2C, B2B. We have about 15,000 direct customers in 34 countries, including a few hundred corporates. And now we're adding platform partners that are that we KYC and AML audit, and then they can start the issuing themselves, right? So we're onboarding obliged entities. But the trust is always the same, is building on something that's proven and de-risked. So we de-risked our solution in some sense by vis-a-vis the financial institutions, our partners, by having a B2C and B2B offering. So they should see how it works. So we know all the KYC, AML stuff. We've done it ourselves. So we can help them do the same for this new world of crypto, whatever crypto means to them, which is essentially just putting their services on chain, which is a shared ledger, which can transact assets 24/7 globally without intermediaries. That's all it is. So that's how we built. We have the same philosophy as Satoshi, he, she, or they, had when they released Bitcoin. Bitcoin is based on two simple technologies which were proven at the time. Public key cryptography on one hand, and something called one-way functions or hash functions on the other hand. So all Satoshi did was to merge these two technologies into one thing called Bitcoin. But it was proven stuff. So we did the same. We looked, where can we find the proven regulation in a major jurisdiction for electronic money? We found it in Europe. That's why we issued in Europe. Mm-hmm. And then we put it on Ethereum when we thought Ethereum was fully de-risked. So that's our approach. And and vis-a-vis the customers, for example, we learned a great deal interacting directly with our consumers. For example, we have a procedure for them to restore their money if they lose it, right? So this is something that people wouldn't think about unless they'd been through the trouble of onboarding a direct customer. What happens if they lose their key? We have a way to restore it or refund them the money. So we invented a procedure for that.
That's actually a really good point. Like, you almost have to have things go wrong in order for people to realize what a good solution looks like. So out of 10, what are you rating sort of the balancing user experience with security principles as a hindrance to adoption? Like, what would you rate out of 10?
I think if you get the principles right, you will earn the user's trust.
Okay.
So, and it's all about... Well, arriving here, I flew in from the United States, is all about trust. Getting on that plane, right? Is there fuel in the plane? Do the engines work? Do the pilots know to do their job? I mean, because we're collaborative, we have to rely on each other in so many ways. When you go into a hospital, you get a piece of medication. When you eat food.
Well, arguably, though, those examples do rely on regulation and licensing, so it's a slightly different example.
It may be, but ultimately, we believe that financial services should be regulated and need to be regulated. The debate should be about how they are regulated, right? But the main thing is collaboration doesn't work if trust breaks down. So then... traffic would stop working if people don't pay attention to the lights.
Well, I never pay attention to the lights, that's fine.
But trust is the main principle.
So out of 10, what are you giving it?
Trust is number one. Get the principles right, and then you earn the user's trust.
Seb, out of 10, how important is this for mass adoption?
Yeah, it's huge, right? It's easily 9 or 10 for me.
So you're rating it higher than the human perception element?
Yeah, I'd say so. I think trust is a big part of it. Maybe just to go back to an example given earlier around the internet and email came along was a big use case and an application. You no longer kind of think about when I send my email, what's going on. You don't think, what is that journey? Where am I sending something? Or if I enter my credit card details online on Amazon or somewhere else. I think that all of that is kind of eroded away over time because, again, various tools, various processes in the background which have precipitated trust to be conferred on the service and all the rest. So we take a very similar approach in terms of, again, dealing with banks. We often have to speak to anything from a chief information security officer to a head of compliance, CTOs and all the rest. And they need to understand at a very granular level how does our solution work. So we actually give them access to the code base. They don't need to rely on our own audits or our own security programs, penetration tests. They can do all of this independently themselves by having the code base and inspecting line by line and deciding, is this something we want to use? Are we going to put any trust into it? Where could it go wrong? And this is, again, they have to think about these scenarios. Well, if things go wrong, what do we do? Business continuity planning, operational resilience, all of these things are super important and also touch again on the boundaries of trust in many ways.
Okay, and Peter, out of 10, what are you giving it?
I would also give a 10 either for the centralized side, so who's my counterparty, can I trust that counterparty, but also for the decentralized side in terms of can I trust the technology that it works correctly.
Okay, we've got 30 seconds each for this next bit. If you can do this, you will get a round of applause from the audience. One actionable insight that the audience can take away today who are thinking about building DeFi-based solutions that go beyond niche use cases. What's one actionable insight or one thing they should focus on that promotes mass adoption? Svein, you go first.
I think fiat on-chain will be much, much bigger than cryptocurrencies. So go and explore the websites of the companies that we represent. See what you can learn and see how it relates to what you're doing in your business.
Okay, Seb?
So I would echo, maybe extend a little bit as well. So the stablecoin side of things, right? You have programmable money for a penny you can send in 1 second around the world in a very short summary. But for the institutional guys, you're also going to have an asset leg complementing your cash leg in the traditional finance and capital markets side. So securities coming on chain is happening now, and securities market is significantly bigger than cryptocurrencies. They will ultimately have similar rails, but they also solve a much bigger set of existing problems in traditional finance, whether that's collateral mobility, intraday liquidity, securities financing, and having the right thing in the right place. Again, it comes back to having superior rails. So I would say think about the asset leg as well as the cash leg.
You've only given 20 seconds to Peter, I'm afraid.
Apologies.
So for me, it would also be the real-world asset topic. So on the first hand, stablecoins as the first real-world asset that really make it to the masses. So we currently see securities being adopted as real-world asset, but as a digital twin. So where I would say it's not like the perfect piece of the innovation because it's just like another layer on an existing layer. So we see in Germany with the Wertpapier digital securities law that currently the market infrastructure is already starting to break up. So before there was only the centralized centralized security register, and now we already have the opportunity, and that was a monopoly, and now we already have the opportunity to kind of like build your own ones, so that we can have like decentralized security registers. And I think that already shows like the direction of the innovation. So that so first we have the money on chain, and then we're going to have the securities on chain, and start to break up the existing market infrastructure.
Great. So I think key takeaway here is it's all about trust, and that can be communicated in many ways, whether that's through community building, proving out through your product over time, and trusting the people that are behind those products too. I think they all deserve a round of applause, don't you?